So the first question that I'm going to answer this week actually is a fulfillment of a promise that I made to you at the end of last week's show. I got the question last week, but we ran out of time before we could get that answered. So looks like the software of choice here is Xero. That's Xero for anyone who's curious. And if you already know what it is, you're probably cheering wildly. Yeah, Xero, somebody out there is using it. The question is, we want to get the average monthly burn using the past quarter as an example. But there were two types of one-time activities during the quarter. Okay, got that. So obviously you wouldn't want to count those in your monthly burn if they were one time, they don't really repeat, and events like them don't repeat either. Let's see, we use tracking categories in Xero. Yes! For each activity, how do I get the monthly burn without those two categories? So first of all, you're asking the right question. And the answer is, first, make sure that all of the expenses, so I'm going to even take one step back. What is monthly burn? In fact, I was an accountant for many years before I even knew the answer to that question. So for any business owners or accountants on this call who are not familiar with that term, don't worry, you're in the same boat that I was. Monthly burn is average monthly expenses. It doesn't include income, it's just straight disbursements. And it does include credit card charges for monthly burn. And a great use of monthly burn is for cash flow forecasting and for strategic planning. Hey, when are we going to have enough money to do X? Or what's our burn right now? How does our burn compare to other companies in our business life cycle, other companies in our industry? Can we do any better? So those are just a couple of uses of monthly burn. Another use of that information is how much do we have to fundraise to cover monthly burn, or how much investment capital do we need to cover monthly burn, including our growth plans. So those are the whys of monthly burn, and that's the what of monthly burn. Charles, welcome to the call. So glad you're here. Charles is a management consultant with a specialty in professional athletes. Welcome. And Hector Garcia, I'm so glad you're on the call. Hector is the QuickBooks man. Welcome. So the answer to the question, first, make sure that on the bookkeeping level, every single expense is tagged with exactly the type of event or activity that you want to track. And especially those one-time activities. I mean, if you're not tracking anything, at least track those one-time activities, because then you'll be able to take them out. And in Xero, it's easier than ever. Hey, Sam, welcome. Welcome so much. Thanks so much for joining me today. Samantha is one of my assistants. She's amazing. She's really got it going on. She's got a bit of the entrepreneurial bug herself. Thanks for joining me. I appreciate it. I'm looking forward to everybody's questions and answers. So once you make sure that every transaction, every expense is tagged with an event or with an activity in Xero, especially the ones that are just one-time activities, you run an income statement. And the easiest way to do this is to run the new income statement. So today is August 8th, 2017. As of this moment, the new one still exists in Xero in concert with the old one. The new one has more white space, it's slicker, it's easier to read. And when you click on the bottom left, there's a button that says Edit Layout. And you can choose the name of your tracking category, click All, and then simply uncheck the two events that you don't want to be included in your monthly burn. So whether it's a huge fundraising event or a huge spend for a program that you have going on, check off all, uncheck those, click done, okay, yes, or whatever it is to wrap it up. And there you have an income statement that shows everything but those two events. If you want to take it from there and export it into Excel to do some additional analysis, more power to you.